As the U.S. session comes to a close and the Asian Pacific session looks to begin, I thought I'd take a technical look at the Aussie versus U.S. dollar. So let's get started. I'm going to focus on the hourly chart, and what we've seen in price action today is a continuation of the move to the downside that we've seen over the last few trading days. Yesterday was more of an unchanged day, but today we rotated back to the downside with 3 of the 4 trading days moving to the downside in this currency pair. Now, the low price that we saw in trading came down to this swing area right through here. The swing area is defined by a number of different swing lows and swing highs. So keep your eyes over here, going all the way back to this point right here. So swing low, swing high, forming this ceiling through here. And then we fell below that, or we moved above the ceiling, tried to stay above that level, couldn't do it, rotated to the downside. And then over the last 2 weeks or so, the price has been back above this area. So we're returning back to this swing area. That swing area comes between 0.6287 and 0.6301. Earlier today, keeping the sellers more in control was a break below this swing area, and I could do the same thing going back in time back here. There's some other levels back there, but if you trust me and just focus on these area levels right through here, you can see how this area was developed as a key swing level. Admittedly, yesterday and today the price got a little wonky around this swing area, but the last thing the price did was find resistance off of the low right here, this swing area up to here. Found resistance sellers against a level and pushed back to the downside into this lower swing area. So this area right here between 0.6327 and 0.6336 did its job of holding resistance and pushing the price to the downside today, increasing the bearish bias. Now, what next for this pair? Well, as we go into the new trading day, well, we can know that this area right here is now resistance. We know this area right here is now support. And also down near the low of this swing area is the 38.2% retracement of this move to the upside. That 38.2 comes in at 0.6285. So if I were to expect a further downside pressure in the Aussie versus US dollar, like we've seen 3 of 4 trading days, we would see a progression through the 38.2% retracement through this lower swing area right here. That would open the door for further selling with perhaps even the 50% retracement coming into focus at 0.62474. Now, if the price is not going to go lower, if you're bullish on the Aussie versus US dollar, this is the area you want to lean against. You want to see a plain vanilla corrective move of this trend move to the upside from the February low to the February high, holding support right at the 38.2% retracement against that level. If the price goes below that 38.2% retracement, get out. If the price holds that level, then we stand a good chance of pushing to the upside. So if you want to buy here further down, this is your buying zone right through here for traders looking for more upside potential for the Aussie versus US dollar. So I hope that made sense to you from a technical perspective, showing you the whys. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.